Reserve decision. I've got no idea where we're going to be in 2 weeks. Absolutely clueless where we're going to be by year end, which is why maybe Mary Daly doing something sensible over at the San Francisco Fed by not offering any outlook whatsoever for the rest of 2023. Your equity market right now negative about 0.4%. Yields just keep climbing. This is pretty relentless stuff. The climb at the front end on a 2-year. Yields up by 5 or 6 basis points right now, just south of 440 on a 2-year. Coming up, the morning calls, and later, the tale of 2 retailers. Lowe's cutting its outlook amid lower spending. Dick's Sporting Goods topping profit estimates. That conversation coming up shortly. Plus, we'll catch up with RBC's Amy Silverman from New York. This is Bloomberg.
Reuniti. Here's to a refreshing break. Here's to unleashing the fizzy excitement and to easy-flowing conversation. Reuniti, the refreshing, sweet, and easy-to-drink Italian wine. Reunite with delight.
Bond yields climbing on treasuries for 8 consecutive sessions on a 2-year. That's the longest streak of gains of the year so far. And equity is just about to show some weakness. We're negative here by 0.4% on the S&P. On the Nasdaq, we're down about 0.5%, going into the opening bell about 5 minutes away. That's the price action. Let's get you some morning calls. First up, HSBC upgrading Chevron to buy. 189 price target, noting the stock's attractive valuation. That stock is up by a little more than 1% at 154.16. MoffettNathanson upgrading Zoom Video to market perform after earnings, expecting its online business to keep stabilizing throughout the year. That stock negative by 2.8%. And finally, Jefferies naming Microsoft a top pick, seeing more than 20% upside, with the company best positioned for the push into, guess what? AI. That stock just a bit softer, negative by 0.2%. Coming up, RBC's Amy Silverman warning investors to be cautious of the rally in big tech, and what a rally it's been so far this year. And that conversation up next. Your opening bell just around the corner. seconds away from the opening bell, call it about 22 seconds away. Equity futures just a bit softer, negative by, let's call it 0.4%. The Nasdaq for once showing some weakness coming into today after the close Monday. The Nasdaq 100 up by more than 26% year to date. There's the opening bell, switch on the board and get to the bond market. Those gains in the Nasdaq more recently, even with this move higher in bond yields, just about moving higher on a 10-year maturity. That piece of the yield curve up by 2 or 3 basis points, 374 on 10s on a 2-year, up another 6 basis points, 8 consecutive sessions of higher yields at the front end of the curve in America. The 2-year just south of 440 at 437. And I can tell you, as we eat away, take a nibble, so to speak, borrowing that phrase from Kit Juice and SocGen, out of rate cut expectations in the back half of this year, we take a piece out of those dollar shorts as well. The euro weaker again, a break of 108, 107.75. PMIs out of Europe, manufacturing dreadful, services just about holding up. Crude better, up 1%, 72.73 on WTI. About 40 seconds into the session, we are lower by 0.5% on the S&P 500. Similar move on the Nasdaq. One stock to watch at the open. Let's check out Lowe's. The retailer cutting its full-year guidance amid a slowdown in consumer spending. The CEO saying this: although we delivered positive comparable sales, we are updating our full-year outlook to reflect softer than expected consumer demand for discretionary purchases. Abby has more. Hey, Abby.
Hey, John. Well, here's something. The stock just flipped positive ever so slightly. Right now, it's down fractionally. This stands out because earlier, the shares of Lowe's in the pre-market, when results were first announced, down more than 3%. Now, the headline that's really did grab attention, that they now see their comp sales down 2 to 4% versus the previous view of flat to down 2%, and the estimate of down about 2%. But we've seen this story again, so investors well prepped for what Lowe's has put out, because of course Home Depot last week cut their outlook on weaker consumer spending. Lowe's talking about similar factors such as falling lumber prices, unfavorable weather, and of course that consumer spending lower on DIY and other discretionary items. Home Depot went a little bit further, saying it was a broad-based pullback, but either way you slice and dice this, it does seem that these two big box retailers that focus on home repair and the like are seeing this kind of a pullback. What's interesting, Home Depot caters a little bit more to the professional person who would be buying these materials. Lowe's a little bit more of the consumer. The stock right now up 0.5%.
Just positive, as you indicated, Abby, turning positive in the last couple of minutes or so. Sticking with earnings, Dick's Sporting Goods topping estimates on Wall Street, keeping its outlook unchanged. The CEO writing in a statement: even as consumers face macroeconomic uncertainties, our athletes have continued to prioritize for us. I can't help myself. They're calling their customers athletes. I find this absolutely ridiculous. It's so silly.